We are seeing some lightness into the close here, Tim.
Yeah, and look, if we think about crucial moments of the trading day, it was that Oval Office conversation or press conference we heard from the president about that framework, about a deal with the UK. He also said he would buy U.S. stocks. That buoyed stocks, but like you said, we're seeing a little air taken out of the trade as we get to the close.
Yeah, I was looking at the IMAP earlier, and it showed that it was an incredibly broad advance with 10 out of 11 sectors in the green. That has changed a little bit here, but worth noting still that those sectors that are lagging behind, healthcare, utilities, real estate investment trusts, they tend to be a little bit more defensive, whereas the ones that are leading the gains, consumer discretionary, industrials, energy, definitely more cyclical.
Yeah, interesting to take a look at other areas of the market, right? You're seeing a pretty solid selling all across the yield curve, guys, particularly in that front end. Yields really moving higher, the highest since April 11th. So we've definitely re-rated most asset classes back to where we were around April 8th, 9th, 10th, once we sorted out post-Liberation Day.
Some even higher than that, like Bitcoin, for example, up another 4.6%, $101,000 on Bitcoin right now. Remember that all-time high was January 21st, more or less, about $112,000 per Bitcoin.
Yeah, a lot of people talking about how maybe we would break out of our range. And yes, we are right back to right around that April 2nd level, just around it. But in order to really break out, there needs to be more concrete details of what discussions are taking place on trade.
You know who's been buying? Retail. Retail has been a consistent buyer within the equity market. But do you chase here is really the question. There is the closing bell on this Thursday. You got the Dow Jones up by about 0.6%, the S&P up by about 0.5%, the Nasdaq up 1%. So we are seeing a little bit of rollover as we headed in to the close here, but nonetheless, a pretty solid day on the trade deal between the U.S. and the U.K. I just want to point out small caps still participating in the rally here, guys, up by, I can't read that far, 2%? I'm going to go 2%, Tim.
I can't read that far either.
Okay, good. So it's up a certain amount.
Yeah. It's
more
green.
Than the others.
It is green. We can confirm that. Hey, taking a deeper look into the S&P 500, we did see 347 names move higher, 154 names move lower. In terms of the prominent ones that moved higher, Axon Enterprise, the maker of Taser, up 14%. A couple energy companies higher. Enphase Energy up by 12% on the downside. Match Group down 9%. Fortinet and Cencora leading losses, at least on a percentage basis, in the S&P 500.
All right, a quick mention just once again of the IMAP. You have 7 out of 11 sectors in the green, as I mentioned, healthcare, utilities, and REITs, and now consumer staples in the red.
All right, guys, we're getting some earnings out. We got a ton coming out after the bell. Lyft coming out. All right, taking a look at earnings for the first quarter, $1. They were looking for a loss of about 68 cents a share, so that's a beat. Gross bookings for the first quarter coming in at $4.16 billion, bang in line with estimates as well. Active riders also coming in a little bit stronger than estimated. Revenue, though, a little bit light, $1.45 billion. Let's get to the forecast now. Looking at second quarter gross bookings coming in anywhere between $4.41 billion and $4.57 billion. So bang in line with the range that was expected. They're also increasing the share repurchase program to $750 million. That stock up over 4%.
All right, you said we had a lot of earnings. They are coming fast and furious in the after hours. Expedia shares doing a whole lot of nothing after the company reported first quarter adjusted EPS that beat estimates. 40 cents was what came in. 36 cents was the estimate. First quarter revenue coming in just shy of estimates at $2.99 billion. First quarter gross bookings coming in at $31.45 billion. That's just shy of estimates of $31.76 billion. Once again, shares unchanged in the after hours.
All right, just jumping in here with Akamai reporting results. This is the infrastructure software company. First quarter revenue, pretty much bang in line with analyst estimates. First quarter adjusted EPS, though, is a beat, $1.70 versus the average analyst estimate of $1.57. When it comes to the outlook for this quarter, the second quarter, it has narrowed the range of its outlook here. As far as the full year revenue outlook, we're looking at $4.05 billion to $4.2 billion. Previously, it had seen $4 billion to $4.2 billion. You look at the shares right now, currently unchanged, but we do want to mention that the CEO, Tom Layton, will be joining us tomorrow on the close.
All right, like a deep tease. All right, also looking at Paramount Global. So revenue came in at $7.19 billion. That was down 6.4% year on year, but a little bit better than estimates. Let's get to some of the details, though, with that. TV revenue portion comes in stronger than estimated, yet still down 13% year on year. That direct-to-consumer revenue a little lighter, but yet came in stronger on a year-on-year basis. And the entertainment revenue for film beating estimates and also up on a year-on-year basis. In the press release, guys, they talked about the completion of the Skydance transaction is subject to regulatory approvals and customary closing conditions. The transactions are expected to close in the first half of 2025. Scar.
It sounds so innocent. It sounds like such boilerplate when you know that there's a lot of drama behind it.
So much drama. Yes.
All right, I'm watching shares of Trade Desk, and they're moving higher in the after hours. It's the ad tech company, up about 11% right now. Shares were up as much as 14%. The company reported first quarter adjusted EPS that beat estimates, saying that second quarter revenue will be at least $682 million. That's just a tad shy of the $682.7 million that analysts wanted to see. Second quarter adjusted EBITDA coming in above estimates, and the company sees second quarter revenue coming in just ever so shy of estimates. First quarter adjusted EPS did beat at 33 cents, and first quarter revenue did beat at $616 million. Once again, shares up about 10.7% in the after hours. All
right, let's take a look at shares of Dropbox, moving right now after reporting first quarter adjusted EPS beat analysts' estimates. We're talking about 51 cents. Analysts were looking for 62 cents on average. In terms of the revenue, $624.7 million does top the average analyst estimate. The stock, however, just down marginally by about 2% right now.
All right, I just want to go back to Lyft for a second because that stock is driving higher. I can't say that, but I was trying to make a pun. Moving much higher in the post-market. It's seeing that gross bookings is about to be on the high end about $4.57 billion. That low end, $4.41 billion. We're seeing a big, nice jump in after hours earnings and increasing their repurchase program.
And a huge contrast to what Uber reported, right? Because they reported weaker than expected quarterly gross bookings for the period, and they were citing the slowdown in the economy, a slowdown in the rideshare business. And so perhaps people were expecting Lyft to do something similar.
We have to wonder what the margins are to look at that as well, because part of the way that Lyft can do that is by competing on price, and that might hurt other areas.
Okay, I'm looking at what's going on with Wolfspeed right now. Third quarter net revenue did meet estimates. Shares, though, really moving lower in the after hours, bouncing around about 12, 13, 14% lower as we speak. Third quarter net revenue coming in just shy of estimates, ever so slightly. Third quarter adjusted loss per share coming in at 72 cents. That's shy of estimates at 82 cents a share. So that was pretty good. Third quarter net revenue meeting estimates. Looking for more headlines on why shares are moving lower. I will get those to you as soon as I get them. Once again, shares of Wolfspeed in the after hours down right now by about 11.3%.
All right, let's take a look at Sweetgreen as well. Once my favorite salad company until I decided I couldn't afford the $20 salads every day. Let's take a look at revenue for the quarter. Revenue meeting analyst estimates, $166.3 million, slightly higher than the anticipated $165.1 million. For the first quarter, it did report a loss for the period. 21 cents a share was a loss. That is narrower than what analysts were looking for. They anticipated a loss of 22 cents a share. The stock marginally higher right now, up by 1.1%.
All right, I'm taking a look at TKO. That, of course, has the brands like UFC and WWE. They raised their 2025 full-year guidance despite the fact that their first quarter earnings did miss estimates. The UFC adjusted EBITDA coming in at about $227 million, and the WWE EBITDA coming in about $193 million. The CEO in the press release saying, look, we're off to a good start. Both UFC and WWE are delivering solid financial results, guys.
All right, well, speaking of solid financial results, Pinterest shares are higher right now, and it all has to do with that outlook coming from the company. It says they see second quarter revenue coming between $960 to $980 million. Estimates were at the lowish end of that at $963.7 million. Shares higher by about 11.3%. First quarter adjusted EPS came in shy of estimates. First quarter revenue, though, came in above estimates. The company does see adjusted EBITDA for the second quarter coming in at $217 million, $237 million. That is within the range. Estimate was for $237.4 million, so just shy of that range, I should say. First quarter adjusted EBITDA did come in above estimates at $171.6 million. First quarter monthly active users, though, was higher than estimates at $570 million. Second quarter revenue, in terms of that outlook, plus 12% to plus 15%.
All right, let me just jump in here with a healthcare company or a healthcare equipment company, and that is McKesson, reporting fourth quarter adjusted EPS of $10.12, beating the consensus estimate of $9.75. Revenue also up. Revenue actually trailing the average analyst estimate, $90.8 billion. Analysts were looking for $94 billion. As for the outlook, it sees 2026 adjusted EPS of $36.75 to $37.55. Analysts were looking for $36.73, which is lower than that range. And McKesson says it plans to separate its medical surgical solutions segment. So again, an announcement here from the medical equipment company McKesson saying it plans to separate its medical surgical solutions segment.
All right, taking a look at a firm here. Shares were down by about 4% after issuing their third quarter results. Their third quarter revenue coming in a little bit better, though, $783 million. The street was looking for about $782.9 million. So definitely on par with that. We can go through the press release and bring you more details as it crosses.
That was a lot of earnings. And we're not quite completely done. We still have more companies to report. A big thank you to both of you. We can hold down the fort. We don't need Carol and Romaine, do we?
Let them enjoy their flight back from LA.
Yeah,
hey, Carol's hard at
now.
work. Carol's hard at work in Arizona. They're not letting her come back.
What? She's on the West Coast.
No, I know. She's still working. She's been on like many planes. That is going to do it for our cross-platform coverage of the market close on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. We're going to see some of you back tomorrow, same time, same place. I think Carol gets the day off, finally.